Happy Monday, everyone, and hope you enjoyed your Mother's Day and spent a lot of time with your mothers, and also for the mothers that are watching here today. We're kicking off the week with Brendan McCarty as usual to get a look at the week ahead for all of you. How are you doing, Brendan?
I'm great. How about you?
Fantastic. Thank you very much for asking. Before we jump into the show, don't forget to click on the like and subscribe buttons below. Numbers keep on growing. I keep telling every week, but fantastic, and thank you so much for that help. We're going to be digging into China retail sales numbers today. We're also going to have a probably heated discussion on Robinhood and their 24 hours of trading, 24/5, I should say. We're also going to look at Walmart earnings and Target earnings as well before jumping into love it, like it, leave it picks. And you're going to have to hang around to see what those are. Okay. China has their retail sales, industrial production, and fixed asset investment data coming out at 10 o'clock tonight. A lot of analysts have been pushing the China COVID recovery story. Jay Poloski has been talking about it for a while now. And when we do shows with him on Fridays, make sure to go check those out. Is it all it's cracked up to be, though, this Brendan? We saw JD.com report good numbers last week, but the stock ended up pretty well flat for the week. Baidu and Baidu report this week, and we're going to look at them in Triple L shortly. But Brendan, do you think that this data tonight can give investors some sort of confidence in this forecast for a bullish Chinese economy?
So I would no. I've never trusted the economic numbers out of China. I'm not about to now. JD's numbers were interesting. It shows that the consumer is waking up. But tonight's retail numbers are expected to be up 22%. Now, if the U.S. economy showed a rebound of 22% on retail earnings, stocks would be rallying into that number. So that tells me that investors just don't believe the numbers to start with. I would say this reopening has been very mediocre in China. If you look at their stock indexes, they've gone nowhere in the last 3-4 months. I know overnight, Hang Seng and the CSI both shot higher in anticipation of this, but they're not below, they're still in downtrends. So all it was shorts covering, fearful that there might be an upside beat. So that could be a little bit in that. And JD's numbers and outlook weren't bad. I didn't have a full chance to look at them all, but I think they were better. So that is, if you look at real company earnings, then you can maybe make a case for it. But overnight, the news for China wasn't about robust earnings. It was two more property companies went down. Iron ore prices are starting to rise after 3 months of going down again. So steel demand is waking up. Energy demand rose, but it's only because they're buying cheap Russian oil. I still don't put a lot of context in this. China's reopening is very mediocre. It was sold as a big deal. If it was such a big deal, why is Baba's stock back down after announcing they're going to split into 6 pieces? So, they're supposed to be showing, earnings notwithstanding, that stock should be going high. If China's reopening and they're about to split into 6 companies that benefit from all parts of a reopening, you think Baba would be shooting to the moon, but it's not. And I look at it this way: it's just opening, fine, great. They're doing business again in the world, but the world is not so connected as it used to be. And these numbers tonight they're going to be good. I think they said retail sales up 21%, industrial production up 5%. Yeah, whoopee. If Baba and Baidu say earnings are going to see their earnings growing, different story. But JD didn't exactly blow the numbers up. So I would just say that tonight they covered into the numbers. I think there's a risk of a miss, if anything, and that has to be kept. I don't buy the China story. I never have. There's just too many bureaucracies and too many non-capital market vested interests governing things, and it's just like anytime somebody gets any power over there, they step on them. I mean, just ask Jack Ma.
All right, let's move on to Robinhood then. And last week they announced that they're going to launch a 24-hour trading platform on a platform, but 24-hour trading on weekdays in stocks and ETFs, including Amazon, Apple, and Tesla. That will mean continuous trading from 8 p.m. Eastern Standard Time on Sundays until 8 p.m. Eastern Standard Friday. And they're trialing it with 43 securities to start. The thoughts of 24-hour trading have been bandied around for many years, and the evolution of crypto trading, where trading is 24/7, has coincided with the rise of retail traders. Brendan, personally, I've not been the biggest fan of this idea. Mentally, it's very straining. Employee-wise, it's costly and mentally draining for them as well. I don't think portfolio managers are going to be too concerned at this stage unless there is a significant volume going through. But what is the cost from a mental side? I spoke to Oliver Rolfe, CEO of Spartan International Executive Search, and the author of The Holistic Guide to Your Health and Wellbeing, to get his thoughts on this. Oliver?
Hello, it is a genuinely interesting point. And I think the first point is, you look at the fact that you take 43 securities to start with, where does that stop? Because as soon as there's a progression on those 43, it could quite easily tick up to 100 and then 200. And then you're looking at a much wider spectrum as well. So automatically you've got a strain on any individual straight away in that point of view. The second point is, we haven't been in a 24/5 trading environment ever. And whilst it has been talked about a lot, and there is, dare I say, a call for it, because it makes the markets more accessible, it gives the retail trader more of an advantage, I guess, in some ways against the institutional. But as you've already mentioned quite clearly, what's going to happen when there is an issue at 2, 3, 4 in the morning, when you would normally be asleep and peacefully asleep, and you don't have the call to say, look, there's a potential stop loss and you could be called out on X, Y, or Z. You basically, as a trader in any open position, are never going to feel comfortable shutting your eyes. And if you think about the impact that would have on an individual, I know what it's like, even being a small day trader back in the day when I had my my fair pound in there. But realistically, I felt the stress just having that on a daily basis, even like a minute by minute basis. And if you're thinking that the clock never or is never going to stop, the exposure that's going to have on the markets is potentially very great. But also for an individual, I think you're opening, as we've discussed, a Pandora's box, not just in terms of where the market could go, because realistically, if this ends up working, I'm sure other firms will follow through. They'll see what they're missing out, and obviously having more trading hours for their bottom line is going to be more positive. But realistically, it can only lead in a more negative way. Look, I've been saying this for some time. COVID should have been the moment where companies took a better view of their employees, mental health, well-being, all of it together. And unfortunately, what we've kind of seen is I wouldn't say a reverse of it, but there's definitely seems to be a neglecting factor in how companies are looking at mental health, or even looking at health in general. We know that we've lost a year and a half or 2 years in terms of revenues and work and whatever else may be. However, it doesn't mean we have to ramp up from 0 to not even 100. It seems like 150, 200 at the moment. Everyone seems to be completely exhausted at this moment in time. I think there's constant stresses. Technology's made sure that we're all more accessible, and it just feels like it's continuing more and more. Now, if you go down this route and it start opening markets and trading for 24/5 or 24/5, it can only end in a negative cycle. The only way it will ever help is if technology improves to a point where AI takes over the strain, which even in that sense, it doesn't really help, because it's causing strain in a different light by reducing then a number of jobs available. So for me, that was the one thing when I thought and I heard about the 24/5, can it be done automatically? Can it be automated? Can there be a system that actually works where it doesn't have stress on the individual? And potentially, if the technology is good enough, then that will be something they'll look to go forward with. Otherwise, it's going to be very, very difficult for the individual.
Thanks for that, Oliver. And if anyone wants to actually see that book of Oliver's, I've got the link right there below. Brendan, like me, you've been in the markets for quite a while. What do you think of this offering from Robinhood?
So my first thought was, Hood's still in business? No, I'm just kidding. That stock's going down the abyss. I honestly, this is the last ditch. They don't make any money, so they have to figure another way to make money. When they got into crypto trading, I think crypto peaked. So Robinhood always picks the wrong time to do things. And they're I don't mean to crap on Robinhood, but they're not. Retail trading has kind of gone sideways for a long, long time, as evidence of the meme stocks kind of going away. Now you see memes in the crypto world. I would just say with Hood, this is a last-ditch effort to try to get more business. But if you and I both know that the brokers over the last 10 years, over the last 15 years, have gone away from trading. They've gone more into high net worth, into asset gathering, into retail and fees. because that's what the SEC pushed. Now that Hood's trying to go against that whole tide, and as long as the big guys don't adopt it, I don't think you're going to see it on that massive a scale. And if you don't see it on that massive a scale, the markets will be too thin for anybody of interest to get in there. Now, we trade futures overnight, so I have plenty of sleepless nights. I can tell you that. We have positions that work overnight. The gamers come in at certain times of night and try to juice markets. 4 a.m. is a particular interesting time where whoever, like Europe, is just starting to wake up, and all of a sudden they gun them. So here I am at 4 a.m. waking up, like, what the heck is going on with these markets? That has nothing to do with the U.S. So there's a lot of gaming of it, but I don't. Crypto is what brought it in, like you said. If anything, if these guys start trading overnight, you might replace 50 crypto tokens in the process, because these guys will probably be thicker and are more, the volume will be better. But overall, I don't think it's going to take hold. Stock futures were formed. I don't know if you remember those. We still have quad witch, right? You don't hear too much about stock futures. Stock futures, futures on stocks, or whatever you want to call it. You don't hear too much about them. They trade 24/5, and nobody talks about them. And they're based on Amazon. They're based on Apple. They're based on massive S&P 500 companies. Crypto is traded 24 hours. We model it here at Column E, and there are times where it can be really gamed. So what if Microsoft were to fall 10% overnight? And would that trip the circuit breaker that the SEC has in place? And what happens if it goes? There's too many questions. I don't think the SEC is going to be a big fan of this. They're not a big fan of crypto to start with. I just don't think it's going to gain. I know Oliver was right. It does weigh on you to be thinking 24/5, but gambling is now 24/7. People are on their phones all the time. I don't think it'll be that major leap in terms of trading around the clock. But if the people that actually use these exchanges and drive the revenue on them are not making money, they're not going to do it. And so I just don't give it a lot of hope. I think it's going to go the same route as stock futures did. That's just me.
Well, think about who's on the other side of this. Is not a retail trader on the other side. On the other side of this, companies like Jane Street and Virtu Financial. They're the market makers on the other side of this. They're not silly. Like they've made their money through the years from making markets. I presume that if this does take off, a Citadel will jump into this as well. It's not healthy for the retail trader to have this stress level on them all the time. I've been around long enough that I was traded in the Woolworths IPO in Australia and the Tabcorp IPO. We actually kept the market open longer hours for the US market to trade in the IPO. I've never heard of that actually ever happened since. It was brutal. I was working in operations at that time with a broker dealer called Macintosh, and 10 o'clock at night, we're still sitting there and we've been in there since 6 o'clock in the morning. It's not healthy for you. Now, take it to another level with a retail trader. Let's say they've gone out and had a fantastic Friday night with their friends, let their hair down from the week. It's like, all right, or maybe they even started earlier. There you are, 7:30. You're like, you know what? That was a great conversation I had about Amazon. I'm going to go throw $25,000 in Amazon. Wake up on Saturday morning, go, what did I do? I can't afford that $25,000. I think it really that's not saying that anyone couldn't do it during the day. I just think it's a massive strain across all resources, not only the retail trader mentally, but also for the broker dealer as well. You have a risk officer involved. You have to have, and like that goes around the world because you're not going to have someone sitting here in the US the whole time. I think there's just so many factors in here that I just don't think it's feasible for the equity markets to be able to handle.
Yeah, I still don't. The Citadels of the world won't jump into this because it's too small of a market. It won't be big enough. And Virtu and those guys, they still need the brokers to give them flow. I just don't see it. I trade 24/7. Well, what's the ES futures? 24/5 or 24/6, give or take. I mean, even the currency markets aren't open 24/7. I mean, they close from like, I don't know what according to Bloomberg, it's like 6 o'clock at night till like 9 o'clock on Sunday morning. Even they take a break. if anything, I could see the markets being, I could see the benefit of this expanding transparency in the markets. So like one of the biggest problems when you model equities is the gap overnight. So you look at, all right, and Microsoft closed at 309 today, and then tomorrow it opens at 315. Well, you know what? You can't really protect against that. You have to trade it day by day. That's not something I particularly like. I wouldn't mind it being open in terms of risk protection, but then you go into risk protection on the whole side of this is like, all right, how do stops work in a thin market? Well, you're not going to do it. You're not going to test stops without actually seeing the data from the market. This will take a very long time to adopt. People use risk management. I still go back to like you look at Trade FanDuel, you look at DraftKings, you can basically gamble 24/7 now, and people are doing it. I think people, from a trader's perspective, from you and I, from what we used to do, we'd sit on the desk we'd sit on the desk all day. I do not want to trade after hours. I want to go home. I spent the whole day trading. I can perfectly see that side of the equation, but computers are taking over everything. And like at Column E, I run stops overnight with the futures because I know what I'm getting in terms of liquidity. I know how patterns work. With Microsoft, I would need 10 months of study. Honest to God, I need to see how it would trade during those periods. There are U.S. stocks that trade overseas, right? We still do that.
Yeah, a DAX and Zetru.
Yeah, so that 24-hour trading does exist in that regard. It goes overseas, so you have that gap filled. But again, I think it goes down to profitability. If this thing is not profitable for any of these guys, they're not going to do it. And Robinhood has proved that anything they invent they've been counter to anything. They brought in crypto, they almost collapsed their company. They're going to go trade Amazon, Apple, and Tesla. Well, maybe the guys that trade this stuff don't want to trade it. I think ultimately it comes to supply and demand. And I just don't think there'll be demand for this. I see the point of it. I could see if people started, trading like I said, with the US, like Amazon all of a sudden has its European version. It also has a Chinese version. And that's how you get your 24 hours, because you have people in those periods, those places of the world. Robinhood's not going to push this forward unless it's profitable, and they don't have the infrastructure. They can do it online. So I completely understand what you're saying from psychological. It's not a good idea to trade 24/7. I have many sleepless nights with the markets volatile. March wasn't the easiest time. But I just don't put a lot of context into it. I see the point of it. I understand why they want to do it. I just don't see it. If it's not profitable, they won't do it. And Citadel is just way too big to get into this market. They're not going to trade 5 and 10 shares of Microsoft. It's just not worth it to them. I mean, they're what?
Unless it's big volume.
Unless it's big volume, but you need, like, Citadel trades largely in the first 30 minutes and the last 30 minutes, last hour. And they're a little bit in between, but that's where they make their money, in the big volume periods. Well, I don't know. I completely understand the psychological side of this. I understand what Oliver is saying in terms of how companies are, rushing to make everything 24 hours because we're all at home staring at screens. I understand that people that have West Coast operations are working to 8 o'clock at night from the East Coast. It's all not good for our mental health, and mental health the pandemic opened our eyes to mental health, and it shouldn't be closed. These companies need to think of that. So I understand that side completely. I just don't think it's going to, I go back to, supply, demand, and income, and I don't see it. I see it in the futures markets, and because futures have been around for 500 years. I mean, corn futures have literally been trading in China since the 1700s. Microsoft hasn't, and there's history, and there's people know how to deal with those markets. I guess call me skeptic.
Yeah, I'm with you. All right, let's move on, because obviously I could talk and argue about this thing for a long time.
I agree with you.
Walmart earnings are out Thursday at pre-market, and they're up 8% year to date and nearly 4% over the last 12 months. We've seen Telsey raise their estimates going into these earnings, and the stock is near all-time highs. But how about this for a stat? Foot traffic analytics firm Placer.ai says that after store visits by retailers swelled in 2022, the growth shows signs of stalling. Monthly visits in the first quarter of 2023 fell over small across the board of retailers. The firm noted in a report last week. Sorry, I've stumbled through all of that. Brendan, the chart has signs of stalling to me, but what are you thinking for Walmart?
So it's interesting. It's just brought up a point here. So when the Fed started sucking liquidity out of the system, wealth fell. People stopped going to the stores. Fed injected cash over the last month and a half. People are probably going to the stores again. I think we probably talked about this. I was at a Home Depot yesterday, and besides the plants and the flowers being garbage, there was a ton of people there. Anyway, on Walmart. So I did a little study on Walmart. Actually, going back one more thing. Placer AI. When did they adopt the AI? Because Placer has been doing this stuff for a long time. Now that maybe their machine was an AI and they never told anybody, so now they're Placer AI. But Placer
jump in there quickly. A quick sidebar. If you go back 5 years ago, everyone put blockchain on the end of their name to raise their valuation. Everyone's doing that now with AI.
That's like all of a sudden they're like legit. Now Placer is legit in terms of earnings. What they when we talk about this stuff, a Placer is usually Bloomberg uses Placer as a balance against their views. Like, for example, they see revenue traffic up for Walmart. They foot traffic up. They see revenue a slight beat. I did some study on Walmart because Walmart versus Amazon is interesting. I always like to look at them. When Amazon's outperforming Walmart, you tend to see growth in the economy, and you tend to see Walmart's numbers slow. When you see vice versa, you see Walmart outperforming Amazon. You see Walmart's numbers slightly better. Let me rephrase that. Walmart's numbers will grow while Amazon's outpacing it. And they'll grow, but they won't grow as fast as Amazon's. When they're besting Amazon, their numbers will actually slow. So right now, they're not really. Amazon is slowly gaining, but it's sort of like a dead cat bounce after a hammering, if you will. Amazon had a tough year, so it's slowly gaining on Walmart, more of a dead cat bounce. We're in a period of flat earnings for Walmart. Even if they beat on the revenue number, I don't know. They could say outlook is great, and I think that will actually blast them through the highs. But then people will look at the outlook and say, "Wait a minute, you're making all the money on food. That's wonderful. You're a grocery store too. You should do well in grocery." And I will say, I was in a Walmart around Easter time picking up Easter candy. Matter of fact, and I had a chance to, and you look at prices. I'm a food. I love grocery. I look at grocery store prices all the time. I don't know why. I probably eat too much, but you look at the numbers, and Walmart definitely was undercutting the cheaper grocery stores. So they're trying to draw people into their stores. The candy was cheaper. Buy that grocery items. Well, they're hoping that I go from the grocery aisle over to the general merchandise aisle, and I didn't. And I don't know how many people actually were. So they may beat on grocery and on the grocery side, and that may drive their revenue. But I don't think their outlook is going to be fantastic. And I think you're going to see a beat maybe on the revenue, and maybe they actually report a little bit better earnings based on this anecdotal. But I don't know how good the outlook's going to be, because I think the consumer is still slowing a little bit in this country. Now, there was a trade down. There was a lot of trade down going on with wealthy going into Walmarts. Wealth has risen this quarter. I mean, the Nasdaq's up 22% this year, or somewhere in that range. So wealth has risen for the ultra wealthy. So that could have an earnings beat as well. And they could say that people are trading down into Walmart stores. I still don't think it's a reason for the stock to explode substantially higher. And I think that's what traders will, like your hunch is, the chart looks like it's topping. I wouldn't be surprised if traders, after the numbers come out, then come after the stock, push it back into the range.
Well, maybe they'll get a little bit of an idea from Target, because their earnings on Wednesday pre-market. And while we spoke about a drop in overall retail traffic before, where I stumbled through it, Target defined the trend, I should say, posting a slight increase in both first quarter visits and visits per venue. Brendan, I feel like Target always seems to manage to let investors down, though. I think their stores are great. I actually enjoy going to them. And it looks like analysts may have doubt going into these earnings as well, though. JP Morgan lowered its price target over margins concerns and placed on the negative catalyst watch list. That's a mouthful for me. Options are trading implies a 7.7% move after the earnings report. So volatility is obviously expected here. Brendan, what do you think we could see from Target?
So Placer is seeing lower revenue as well. That Bloomberg cited that. It's interesting. I wondered if Telsey follows the Placer revenue when she upgrades things, but I love Dana. I think her numbers, I've always loved her stuff. She always wore those black suits at Bear Stearns, and everybody knew it was Dana Telsey. Anyway, aside from that, I don't know what she has to view on Target, but I will say this: their digital is very good. Their prices are very competitive. We use digital. We use their stuff because they usually have stuff that Amazon doesn't. Strangely enough, but I was looking at Target's earnings prior to the pandemic, during the beginning of the pandemic, and then post-pandemic. I think management. We made fun of management last year. They guide down 3 times, like them and Nvidia, who couldn't guide down quicker, and they couldn't figure out inflation. Now inflation is sort of subsiding, though I think it's going to tick higher, and then they're going to have trouble again. I don't know if Target's run. So Target prior to the pandemic was mediocre, rising, not great. Everybody got free cash for the pandemic. Target shot to the moon. Reality sets back in, and now the revenue is falling. Earnings, as analysts expect 2024 to be a good year for them. But I wonder if we're in a long-term downtrend with Target in terms of I wonder if how retail goes through these fits and starts where if you have a retail outlet and everybody starts shopping online, well, you suffer because nobody wants to go bricks and mortar. I wonder if Target's part of that overall long-term downtrend. They have a great digital outfit, could offset that, but they're not Amazon, so it's not like they're going to be Target.com instead of Target stores. I would just say that I'm not looking a lot of hope with this. It's not I think the management, did they replace management? I didn't even look for that.
I think it has happened over the last few years. I think it has happened.
Yeah, like they're doing a $5 billion reform of the stores. I remember JCPenney doing the same thing, and look at where they are today. Target is an amazing product. It's an amazing brand, but management is in the way, and they continue to get in the way. And we're in that period of time right now where Target's actually underperforming Walmart. That usually works. That argues that the economy is slowing against them. That's not usually good for Target. So I wouldn't say I'm going to take what the analysts look at. I'm going to follow the herd on this. I can't believe I'm saying that, but the chart's not great either. And I don't trust the management. I think there's a bigger issue here for Target, that they may be in a long-term downtrend in terms of popularity. Just looking at earnings, it was anecdotal. I didn't put any math to it, pen to paper. But I wonder if this is part of the overall downtrend. Traffic might be up, but with that trade down that I was talking about, people moving into a Target, moving into a Walmart, so they could see an uptick there. Again, we were buying digital from them, not Amazon, so that could be an uptick. That would be a surprise, but I think it's still in a long-term downtrend. It's weird. I like Target. I think I like it as much as you do. But I think management has screwed things up so badly over there, and now they're trying to do these retrofits, and I think they forgot what made them good. I think that's part of the problem.
Yeah, it's a shame. I think they're a great store, and hopefully they defy expectations. All right, let's wrap it up with love it, like it, leave it. There's still plenty of great companies reported. You'll see on this image here. We are winding down from earnings season, so whilst there's a lot less names than usual, it's nice to get to the end of earnings season. All right, we're going to start with Home Depot, and they report Tuesday pre-market.
Leave it. Failed on the 65-week. Store was busy, I said yesterday, but everything was very low quality. I wonder if that argues they're going to have a margin issue.
Okay. Baidu, they report Tuesday pre-market as well.
Risky bet here, but I'll say leave it because China's that variable. It broke through support about 4 weeks ago and has not really recovered.
Okay. Cisco report Wednesday after market.
They've been surprising a lot lately. I think that it just occurred to me, but the chart doesn't look like they want to surprise, so I'd leave it. It looks like HD's chart, strange enough. Failing past 65-week, hit it twice, hit the 65-week twice and then fell. There's a lot of overhead supply.
Okay, and then obviously we're sticking with the China side of it here. Baba, they report Thursday pre-market.
So I just knocked Baba earlier for not rising because they should be rising. It's Google. Google never rises when you want it to rise. Only rises when it doesn't, when you don't care about it too much. Bob had turned nicely though off of 80. So I like this one. So much for all the hype though. I don't get why it's not moving.
All right, I've got two for you on Friday report pre-market to close out the week. John Deere, they report Friday pre-market. I just said that.
So I'd leave it. It fell through 2 supports, though admittedly it's in no man's land. A surprise could shift gears and send traders the other way. There was an interesting article over the weekend about farmers abandoning lands for corn. And if they're abandoning lands, they're not selling much. They're not bringing in much revenue, which means they're not buying Deere equipment. That might be an interesting side story.
Okay, and one that I haven't looked at for a while, but I always do like to look at, and I was surprised when I saw the chart. Foot Locker.
So I have a sneakerhead in this house. Oh, he claims to be. I would leave the chart, though. I was surprised to leave this one. I thought they would have more interest because my sneakerhead has been talking about lots of sneakers. Foot Locker might be being left behind by the direct-to-consumer channel, though. So it fell through support, only barely. That might give it hope to flip the other way, but I would leave it. I think sneakers are still a big thing. I think they still get traded, but I wonder if they're being cut out of the direct-to-consumer. They're not in the direct-to-consumer necessarily from a Nike or Adidas, those guys.
So you're saying there's less
I'd leave it
at Foot Locker?
I'm sorry?
Is there less foot traffic at Foot Locker?
I'm guessing they will be. I don't know what the AI Placer says, but I'm saying yes, less traffic. Even Mahomes, it's off season for Mahomes. He's not selling shoes in the Foot Locker right now. So that's not even a Foot Locker commercial, is it? It's a insurance product, but he's not selling them in the off season. So I would leave it.
All right, Brendan, listen, thank you so much for this week. It's going to be an interesting week of trading. Good luck out there.
Yeah, you too. Have a great week.
And for everyone else out there, thank you for watching and good luck investing.